Okay, now I'm here. Yeah, I didn't look into the chart the whole day. I was just literally interacting with Discord. That's why. So I need to see where it has reached and from where it is going here. Yeah, there was a 15 minutes fair value gap that market has traded before, and this time it's returning from the order block area. So let's see. Let's see. By the way, I'm gonna do it on a practice account today. Today, not just today, maybe the whole week. Because, yeah, I'm not interested. I would love to see it's coming here. That will be great. But let's see if it is willing to come or not. So far, no fair value, so no entry. And also, we have news at 10, I think the PMI or something. So avoid everything. If you have got it, the PM session, okay, since we don't have any entry at the moment, let me actually fix the overlay. 5 minutes and 1 minute. So yeah, I was thinking about all this will be taken, and this is the 1 minute. Yesterday, before I finished, remember what I said, that I have one fair value, two fair value. So I would love to see when market was trading here and it was trying to go higher. I said wait until it can trade into the new day opening gap, at the same time that fair value. So from there it cleared this liquidity. I think someone, I think Alex or someone was thinking about going for a sell short from this area, but what did I said? It created not just relative equal, it was literally exact equal. I forgot exactly where. So here it created equal highs or clean highs like this, and this is maybe the third time it has done that. So don't look for sell, instead look for buy. At the same time it was trading above that new week opening gap, so no reason for looking for sell or something. Okay, so how is it looking over here? No fair value, nothing. I can see the 5 minutes last fair value was traded, which was also a 1 minute fair value, but 9:30. Wait until market can deliver. Wait for it. This is, yeah, 9:30 opening. Okay, so if you can increase the volume a bit, thanks. If you can increase the volume again, how come? Is the volume okay, or it's problem? I'm talking slow, of course, cause I was not feeling like coming to the live stream today, to be honest, cause the way it has expanded using Asia, using London, I'm not expecting anything good. At the same time, like at 10 a.m. we have news. At I think 10:30 or 10:15, something like that, we have another news. Then around 1:30, there is the FOMC member speaking. I'm not expecting anything good at that level. So let's see. Okay, you might be thinking why I went for that hourly fair value, right? Like this one. Or by now you should know, but anyway, I'll be happy to explain. Look at the 15 minutes structure. No fair value, no fair value, a small volume imbalance, no fair value, again no fair value, no fair value. There is a very small on here, a small on here, and a very small on here. So all this move, the only fair value I'm seeing is here from yesterday, and nothing here. Okay, so like barely you can mark anything. So when that is the scenario, you go for this one. Simple. The only fair value you are seeing is here, and the other one is here, but I'm not willing to use this one. Instead I will be using the other one, this one. The reason behind that is, there is a 1 hour gap over here, right? Like market closed at 5, opened at 6, so 1 hour. This fair value gap may not, like, it may not have the power, so instead of that I would love to put it here. Those are the two levels, and if anything good overlaps with the other one, for example, I have this 15 minutes fair value and 15 minutes breakaway gap, so I can keep this in my chart. I'll keep it like IFVZ, but it's not actually a IFVZ. It's more like the last fair value that was the last place where price could hold and come for a bigger retracement. When it's broke, it already has done its job actually from that midpoint rejection. Like after it got broken, market came back, rejected from the midpoint, continued higher. So I'm keeping it that way just to have some idea like where market is if it can go through that area. So far no fair value gap. First presented is here, so I would love to use it as my inversion if that is the first presented. And look at that, this is nearly 4.5. I'm not willing to let me bring my other account so that you guys can confirm. So this is the one I'm planning to complete, or this is the one I'm planning to trade in live stream and ask for the withdrawal. So today, this is how it looks from yesterday. Okay, yesterday's trade, then nothing today, nothing at all, and I'm not willing to do anything with this account today. Not just today, let's see, like even since I'm streaming only the New York AM session, I don't really want to be a part of this week with any of my funded account. Since I missed the London, yeah, like I would love to trade London, but today I was not able to trade the London session. You know, yesterday I didn't sleep at all before finishing the stream. So like after finishing the stream, I had to go to my job and I didn't sleep at all. So yeah. Hey sister, how are you? Good to see you, Martin. Perfect. If you can increase Katy Pen, can you please let me know if it's good now or not? I believe it's good. Yeah, about leave after 11:30 to 12. Yeah, I was planning to leave even like around 11:10 or something, not 11:30 even. Yeah, like after the 11 10:50 11:10 macro. That's when I was planning to leave. Because this is the week you avoid, this is the week you observe, you wait for market to react to the big reports or results, and then you react or come back next week and do whatever you are willing to do. For example, 15 minutes candle is looking something like this. If it's a small body long wick, what you are going to see is a seek and destroy profile. This 2 minutes gonna decide if it will be a seek and destroy or not. Not bearish, that's why I'm not using it as a bearish entry or something. Like it can retest deeper, but I'm not willing to take the entry from here. It's that part. I'm more happy to use it as the inversion when market will this could have been area, but you know I love 1 to 2. So the something like this, if that is the scenario. How long left for the 15 minute? 1 minute 15 seconds. So let's see how the candle is printing by the end of the next 1 minute candle, because it's important. If it's like this and a small body, we know, like we have seen that market so many times. Just avoid that. This is too clean, okay? And all at the same time, this is from a random area, I believe. Although like there is this, but it's the third fair value, so I don't give a damn about that one. I would love to see it's coming for one of these areas. And look at that, last 15 seconds. So what gonna happen next? We are done for the stream, we are done for the day. We are done for the stream and done for the day. There is no reason to look for anything. Look at that bloody thing. Good luck. So what it gonna do is, it gonna literally take some short-term highs, some short-term lows. We are done. We are literally doomed for the rest of the session. Hard to read bias today? Not really. The bias, listen, it's not according to me, it's not according to anyone else but ICT. ICT said when market is trading at a new all-time high or at the all-time high, the only thing you will be looking for is the buy long. Forget about everything. If you continuously keep taking the losses, look for the higher time frame if it has changed the direction or not. And I have shared how you can identify the change in state of delivery. So if you have practiced that, you will know how you can use that higher time frame. For example, look right here, okay? It's hindsight, right? It's hindsight. Highest up close, engulfed, market came back literally to that range. This is what you're seeing. It's hindsight. I'm not interested, okay? I'm not interested, but let me show you how that looks in 5 minutes. Was there a fair value presented? When this, okay, let me draw the fair value so that you can see. I'll mark it as a 15 minutes fair value so that you can see on the 15 minutes chart. Was it presented within that candle range? Yes. Market traded back into the range. This is the delivery you are already getting. This was already an entry, okay? But why we cannot take it? Because it's NFP, non-farm payroll, we cannot. And it's a 5 minutes chart. The stop loss, even though it looks simple, but it will be pretty big. Like even if you just candle, it was not actually that big. Let me check just one thing. Yeah, that was a good one actually. It's not bad. There are the sell side right here, so equal lows. 1 to 2 could have been the target for me. Yeah, it delivered, but yeah, hindsight easy. Before 9:30 cannot just take entry, so it's that part. If it was happening around 9 o'clock, maybe I would utilize that one, although I was not in front of the chart, you know, I came even late for the stream. So yeah, I mean, it is what it is, but that one. This is a 5 minutes fair value, okay, not 15 minutes. I just marked so that it can appear on this one. So you know how you have to mark or identify. Okay, so this thing will not deliver good price action today. This fair value. The way I'm seeing it's not going to deliver good price action. Maybe PM session or maybe after the 10 a.m. news, but not now. I have seen the 5 minutes possible change in state, but there is no fair value gap presented, so not willing to utilize that change in. Simple thing. 15 minutes is a doji candle. The 9:30 candle is a doji candle. You will see it will take some highs. It will come back. Like it's a range bound price action that you are going to see right now until at least 10 o'clock. Using the news, maybe it will give you a direction, but before that it gonna take some high, come lower, take some low, something like that. This will not work. There is news. Yeah, we have news at PMI. We have PMI. I don't really care about the crude oil inventories because it's literally mostly for the crude oil. I have never seen any effect on NQ or ES using the crude oil inventory. However, PMI very important. Fed chair pearl is at 145, so the whole day, like look, 8:15 non farm payroll, 9:45, that's also part of the PMI. So PMI already is a negative thing. Negative means it's good for the ES and NQ, it's bad for the US dollar. Okay, it's USD where you're seeing the negative, not just ES and Q. It's like you will see mostly the currency pairs are working better. Okay, like during those moments. For example, let's see if I can find any euro. I think this is euro. So this type of thing, I don't know. Euro GBP has a bigger financial crisis going on or something. I got the news, but I cannot remember the exact thing that they were showing over there. Yeah, so they have actually, this is futures market. It will not, like the candles are something like this. We cannot trade this future market of forex. It's literally rubbish. You can maybe check the gold as well. Gold can be bullish as well. It's bullish too, but yeah, unfortunately there is no way you can frame a trade or setup. Let me check if I have missed anything on the hourly. Not really, I haven't. There is a immediate rebalance zone over there, but I don't believe that is the reason market is going higher. And this is too clean liquidity. Okay, mark this, it will be taken. This is the sell side for you. This is a clean sell side for you. I don't know what I have here, all like now I can see, but yeah, like this is the sell side liquidity and this is too clean. Market should not. What I said is it will create relative equal highs, take some recent swing high, come back, take some recent swing low, or first create some recent swing low, then go higher, create some more relative equal highs over there, then come. It's like back and forth price action. That's what gonna happen within this range because of the way 15 minutes gave us the 9:30 candle, this candle. This one, I'm gonna keep it, but I will be seeing like how that one is working today. It's so far this is the only fair value after the 9:30 opening, but I don't believe it has what it takes. Don't take any entry yet. 20 handle. This is 25. Okay, let's see. This was the projected terminus for yesterday. It delivered today until that far, but oh no, where is the other one? Did I remove it? Wait a damn second. Where is this one? 464.50, 464.50. There is a better one around that 500 level, but I'm going with the nearest one, 454, 64.50. This somehow I have moved it. Let me remove this one. It has delivered earlier. I think it moved little higher, but somehow it moved little higher. This was not the one. This was the one. Do you know a funny thing? I have talked about it in Discord, like literally, I think during the London session. Why 6450? Why 6450? Let me go back again to that initial consolidation from yesterday where the accumulation, manipulation, and all those distribution happened. It already reached very close to that, so I'm calling that a win-win situation. Oh. No, 44, that one. I think I have misjudged it. Or I'm looking from a different place. This was the one actually, sorry. So it has actually arrived there. And don't forget the 5 to 20 handle preference. It's that one. It was that one. Cannot frame the setup yet. Okay, like I'm not convinced yet. I need to see that the market is not creating a bigger range. For example here, this can be the range as well for the consolidation. Let me oops. This can be the consolidation range because how the bodies are reacting around that area. Let me check the 5 minutes if it has a better structure or not. No bullish fair value. Does it says like it has the strength to go higher? I'm not seeing it. And 2 minutes left. I will show you how the 15 minutes is looking. I believe you have it on your side, but this is how it looks. Okay. Nothing is going to work. I'm keeping it here, but yeah, like I would love to see if there is anything better to mark or not. And this is how the 15 minutes next candle is closing. So you're looking into a bigger range. This is the obvious sell side, obvious. 15 minutes bearish FVG test. I mean this one. 5 minute has a bearish clear FVG over there, but whatever it is, you cannot frame anything because in just less than 2 minutes we have the PMI. So be aware of that. This is the high impact. and I'm expecting a bigger move anytime now. Like literally the minute before the PMI, there will be a bigger move. So do not do anything before the news. Don't do anything at all. This week is the week you observe. This is the week you practice. Like if I took the entry or if I framed anything, when I have a non-farm payroll, I have a FOMC member speaking later the day, what could have been the result? Observe it for a couple of weeks. Every month, first week, observe it. It will be helpful. Think this way, okay? Monthly candle. how the monthly candle gonna form? Monthly candle will open, then if market is willing to go bear, even bullish, let's say bullish, it will come lower, that is the manipulation. It will go higher, that is the distribution, like accumulation, manipulation, distribution, come back, close like this. This will be your monthly candle. So it's the first week of your month, expect something like this can happen, and then then the what it calls, then the candle can expand higher and create a brand new all-time high, come back, close into the range, something like that. Okay, the opposite will be true if it's, look at that 10. So be fearful. That's what I was saying. Where is my fair value gap, the one I just draw? Where did it go? The hourly fair value. What the hell? This is that, okay? After this liquidity, fair value gap, trade, it was a setup, okay, because of that clean sell side. But news cannot, you cannot. Even this was a setup too, like literally above this side. How? The 5 minutes inducement liquidity taken, market continued lower. See that? This was the fair value gap from 5 minutes. Liquidity grab happened, market gave you another change in state within that candle range. This was the fair value. Market came back into the trends, continued lower. But this is not a setup. It's just because the news, you have to avoid everything. This is that part. It's in consolidation. Look at the 15 minutes. See that body? Look at those. Okay, it's not just this, because if that is the scenario, then this will be your manipulation higher and then distribution lower. Not like that way. It's a bullish market. You want to be bullish on the market, so you want to see the bigger range, identify the bigger, because it's rejecting. See from where it is rejecting, you want to identify the bigger range. It's not just this, because here the equal or similar level bodies, equal lows or relative equal lows, same area market is rejecting or finding it hard to break through. So not just this, because that will be your manipulation then, and this is your distribution leg. No, on a bullish market, you are not looking for a market maker sell model. Let every sell go, wait for the opportunity to take buy. I'm liking the fact that it's creating relative equal highs over here, even in 1 minute. Okay, I would love to see how market is coming lower. It's that seek and destroy. High taken, came back, some low taken, relative equal low created, relative equal high created, again going higher. It will create a short term high, come back, take some short term lows. That gonna happen throughout the entire area. Okay, let me check what's the report is actually. S&P, where is it? Okay, it's also negative. So good for the currency or good for anything that trades against the US dollar. Today literally it's a waste of time, to be honest. I'm not interested. Yeah, like during the London session I was not here, otherwise I saw like a few of the setups from the Discord photos that some of you sent me. Did you trade London? No, I didn't trade anything today. I didn't. I didn't do anything today. And when I returned home, I literally slept the whole day. That's why I was not feeling like joining the live today. I know, like it today I was not. When I saw the Asian London expansion, this is the New York AM session where you can expect the consolidation. Market maker series on my channel, I have said the time and delivery. Okay, inside of that video I have talked about it, like how you can break down the market maker model according to your trading style. You can be a session based time and delivery. This is the video, okay, lesson 6. This one you want to see multiple times until it's clear to you, like multiple times, not once, not twice, maybe 10 times. You need this. This is the only thing you need. You don't need daily bias. You don't need, I don't know, like this sounds bad, but I'm saying this because I don't look into those things. I look into the chart, I mark the obvious liquidities or obvious level, what market did, where I found my initial consolidation, where is the accumulation manipulation happening, based on that. Okay, so this is the video you want to watch multiple times if you want to understand what I'm saying right now. Like when Asia is not your accumulation phase and London is not your manipulation phase, because this is a market maker sell model that I'm using as an example. So when this is the scenario, okay, when this is the scenario, then you will find London is the one making, like this is a market maker sell model, so London is the one will make the high of the day and New York will give you the distribution. It's like higher time frame to lower time frame, that way. Okay, so you have to understand how this sort of legs are working. You have to understand how the session based liquidities are working. It's, you can break it from monthly to weekly to daily to a session. Okay, like we are short term trader, 1 minute chart, we don't trade 15 minutes chart. Okay, so we use 15 minutes as our higher time frame. What do you think we are trading? We're trading the time based session based liquidity. It's that part that you have to understand what exactly the market is doing in a specific session. What is the session's duty? What, for example, yesterday, how beautiful was it? Like beautiful in a sense that you saw your accumulation during London, you saw your manipulation during you saw your accumulation during Asia, you saw your manipulation during London. Using the New York, it started to deliver the what it calls the expansion happened using the New York. So this is the scenario. It's not perfect by like the candle the way it traded, but I'm saying the scenario of the market when it was accumulating. I took the sell short. When I was bullish, I was looking for buy longs, but yeah, like I couldn't maximize the opportunities it gave me because I was not expecting a certain things that big or that way. For example, this fair value, first time market came, it broke that fair value, so I was not expecting this fake can happen over here. Okay, it respected the fair value the way it respected. How long of a week it gave. Now hourly has even better scenario over there, but anyway, the second time it did the similar thing. It created this. Yesterday was the day I should have only looked into the 5 minutes chart, because 15 minutes is my higher time frame, 5 minutes is my stages where I can find the stages at what stage market is trading. For example, when this accumulation happened, on the manipulation leg, it reaccumulated here. This is stage 1 happening over here. Market came back, took sorry, not took, it created relative equal highs, more accumulation happening here, then this is the final two stages of accumulation happening over here. When market was going higher, it did the exact same thing, like expansion, retest, another expansion, retest, finally that huge push. And all the, like, these trends where market was finding it hard to give you like a big displacements or big expansions, inside of that range you will see most of your candle, like literally look, compare this area and compare this area, you will understand what I'm trying to say over here. So high resistance, low resistance, this is that high resistance. It's finding it hard to go through a certain area for a long period of time, and when it's going through that area, it's making that as a support. So support resistance in terms of ICT. Anyway, if you are not trading this week, then my suggestion will be just go through that lesson 6 multiple times, so that you can get the idea, like what you are looking for in terms of a session delivery, or in terms of like why even in a bullish day, London, if it can take the Asia high, why it should go for a Asia low or a sell side delivery. It's that sort of thing. Finally, but I don't trust yet the move. I'm saying finally because it hasn't done its job properly. This low is coming from the 15 minutes third fair value gap, which is like here or here, like just this. These are all the news effects. I'm not happy to go with any setup over here. Wait a damn second, what's happening with my lines or levels that I'm drawing over there? Anyway, doesn't matter. Five minutes. Hey Solojan, how are you, brother? Yeah, I got your message and it was really heartbreaking. I hope your friend is doing good, and even like you are doing good too. Like, younger brother is, I cannot think about it, bro. I cannot. Like, this was how my projected terminus was on this area. Like, I draw it earlier, so I don't remember exactly, but that's that 64.50. I might have done something wrong on this chart when I was trying to draw the same level, but this is literally that projected terminus. So let's see. And I talked about this 464.50 literally in afternoon, like during the London session in my Discord. Like, keep an eye on that 464.50. This one, I'm not happy the way it's trading, so I'm gonna remove this one. And also, like, this thing I mostly focus from, like, I got it from my friend, so he usually looks for one with 5 handle or bigger. It's not 5 handle, it's literally how much, 3.5 handle or something. So let me check. I think this is the one according to him. I don't know, like, is anyone watching him? My friend T2, is he using this one as his first presented? Because this is the only one that is exactly 5 handle. Other than that, every other gap was smaller than that. Silver, yeah, he's using this one. That's good. That's good. What do you think about my London trade plan? I need your feedback, bro. Okay, thanks for confirming. Okay, yeah. So this is something I'm still keeping an eye on. Okay, cause I haven't used it enough, or I don't use it enough. So I want to observe it by myself to understand how and where I should be placing the stop loss and where I should be targeting. For example, no matter what, okay, I don't even though if it's uh, his way of marking that fair value, but I still look for that 1 to 2. Okay, if it's less than 25 handle, I'm happy with that. If it's more than 25 handle, I'm also happy with that. It's like that. Okay, like for example, this is where that 1 to 2 is aligning or overlapping. There is nothing that can stop the market over there, so I'm just targeting the high, maybe like this way. So instead of 25 or instead of just 2, I'm maybe taking 2.8 28 handle and 2.5, something like that. And usually he puts the stop loss just below the fair value, but I like to cover the candle that has created the fair value. So at least that candle, if it's not a huge range, 11 handle worth of a stop loss or 12 handle worth of a stop loss, good, not bad. Now I would love to see if market can break through this or not, because I have more to look around that area, or if it's respecting that 5 minutes fair value. It should not actually, because it has lots of liquidity left over there. I'm not gonna take any sell short, but I'm thinking about market to come for this sell side and this. Since it has taken that high, reached the projected terminus, it should come for this fair value gap now, because relative equal lows, relative equal lows. Let me, this is a practice account. Oh, come on. It didn't even reach there. Look at that. Anyway, until this far. What a joke. Don't take it, okay? Like it's just a practice account, and I'm just trying to see like if it's willing to go for that fair value or not. Just because of that, do not press your button. I'll be like, unless this is aligning or this is your setup or something, just do not copy me. That will be good. That will be good. The way it gave me, it's literally rubbish. Oh, by the way, is it MNQ that I'm looking at the whole time? What a joke, man. What a joke. Let me cancel it and let's see like if I can go back to the NQ. I don't know when I actually moved back to the MNQ. And now I will take the same thing from there. And this is why oh my god, look at my projected terminus over there, okay? Oh shit, man. It is there, okay? I was just like looking into the wrong chart. And my hourly fair value is on the wrong chart, so I'll just draw it one more time. Tough, tough, tough. The last fair value is holding the price. At the same time, this should not. Let's see, because it has now taken the high one more time and it has a sell side liquidity. If it closes above this, it's a good idea to exit out of the trade because we have a 5 minutes fair value that is holding the price. $451. Yeah, so it was holding, like this fair value was holding. So yeah, I mean 5 minutes fair value was not broken either. Let me check the 5 minutes on here. So the candle that created it has already violated that. Now the third candle is the only one, but I'm not willing to press the button because it has already closed above. I didn't get the opportunity to close the trade. There is no point of looking for sell short, or this is why, like this is why I'm doing it on a practice account, because I believe when the market is at all-time high, you let every sell short opportunity go, even though like it was looking like this can be the inversion. For example, like this is the fair value that market traded, went higher, took the liquidity. When market broke that fair value, it was like, even if it is not the first presented fair value, it should literally hold the price and send market lower, because that's the inversion. But when this happened, it's already telling me that it's not gonna work. So every sell short opportunity, you let it go. Every buy long opportunity, you frame your setup, because it never closed below that last fair value. It just traded the last fair value, went higher again for the buy side. So on a bullish market at all-time high, according to ICT, you should always framing the buy long setups, not sell shorts. Not gonna look for anything, but yeah, like let's see how the market is willing to trade. Five minutes fair value, still holding the price on single fair value, third candle or the long week. That can be a area where you can look for your what a joke, man, not a joke. Let me mark it. Although the sell side is here, but I'm just marking it because of that. And this is the obvious sell side. Like I don't know when it gonna be taken because I'm not looking for bearish setups, but this is the obvious sell side. Mm. Mm. I'm just keeping it this way. Let's see. I think it was 50. It's not 63, 64.50. The only reason I'm looking for this is because it has cleared the buy side liquidity. That's it. Nothing else. Because I have no reference, okay? I have nothing over here as a point of interest or a fair value gap or anything to mark a week's 50%. So the only reference I have is the buy side liquidity. It can be the box setup like this way, okay? Like this is the range from where market can reject. I don't use it, so please do not ask me question about it. I have very small knowledge or idea about the box setup, so I'm just speaking out of my mind, okay? I'd love to see like market if it can go through this area one more time or not. I'm not willing to take sell short. I would love to take buy longs as long as market can clear these liquidities and trade the okay. Let me remove that line. So yeah, as long as it can trade back here and clear the sell side liquidities, if it can do that, from then on, whatever, like every time I'll get a buy long opportunity, I'll look for a buy long. It's that way. Like of course I'm practicing, so I'm doing it on a practice account, but whatever it is, I'm gonna do it that way. I'm not gonna now it's a riskier approach. If I frame a buy long setup, it will be a riskier approach, and that's the thing I don't really want to do. I'd love to do one thing actually. Don't do it, okay? Like this is something I'm just observing. It's just an observation, so please do not do it, but I'm just willing to do it this way. So average entry will come around this level. Even I would love to put another one at the 15, which is 7950. Yeah, and this will be the stop loss. So the average entry will be here. Not all the way here. I'll try to take some partials, but yeah, like if it can give me that above this, if it's willing to do so. This is just an observation. Do not do it, please, because it's on a practice account, so I don't care actually. Would love to see it's going like rejecting anytime now, because I'm willing to have something like this as my buy side liquidity target. So it's that part, but the only reason I put it there is because from the projected terminus it can go like 5, 10, 15 up until 20. So I just put my stop loss at 20 and just placing those orders. It's more like a observation I have done previously. Leave some liquidity for us and then go lower. That will be great. 64.50. Unbelievable. 5, 10, 15. Leave it. Leave it, we can target later. 15 minutes 50% retrace, you check or see Joe? 15 minutes 50%, 15 minutes 50%. So if you are talking about today's trends, then yeah, like more or less it has done that. But I would love to see like how market is going. Come on, come on, come on, you can do it. 15 minutes 50%. I didn't realize what you're talking, but I think you're talking about this. About it's the same range on the 1 minute as well. Sorry, 5 minute as well. But I was looking for that 1 minute week because the reaction. This is the moment of truth. Come on. Create that relative equal high for later use. Come on, come on. I'm gonna keep both of them. Let's see. That's the first presented. Why it has to not really, not really. Sorry. Yes. Oh, that was the inversion actually. Because that fair value trade sent price lower below that low. So that was the inversion that market actually traded over there. Anyway, doesn't matter. More likely like I'm waiting for market to like displace lower if possible and then give us a setup for maybe this sell side, although not interested to take any entry on the funded accounts. It's I'm just putting these positions since it has broke that one 2 times now. I'm thinking like I'm keeping an eye on how market is trading above that high and 5 like the peep ranges 5 10 15 that peep range. So I'm just willing to see if market can give us the entry. $64, come on, first entry please. This is now valueless for me. This is also valueless. Valueless. That's the five pips. This is the 10 pip range. I would love to see it's aiming for the 10 pips at least before it can give us a possible fall. This is do not okay, like this is just I'm just observing how the market delivers. Okay, please do not look for it. So far the 10 pip range is traded, 15 is there. I don't really want to see it's going for the 20 because that's where my stop loss is. Even I'm happy if it doesn't fill it up. So let's see if it can continue lower from here or not. And it will be the target will be the same. Like if it doesn't stop me, it will be literally here, and I'll take some partial. It's a big one, I know, but let's see. Let's see. Let's bloody see, bro. $15 pips, 10 pips. Let's see. Just worried about this 500 level. Other than that, should be all right. I'm like, let's see, like if it can give us a displacement or not, like a retracement, something like that. Okay, so average entry and the stop loss, $600 stop loss. Just worried about the 500 big figure. Oops. Okay, that's a no for me, big no. So let's see how the big no is continuing higher. Did I had to? It's just something that I'm observing. Okay, please do not do it. I have very few experience regarding this one. Okay, I have done it previously based on some structures or analysis, but this is the moment where literally there is nothing that I'm seeing except for the liquidity that I'm talking about. I would love to see like how market is continuing higher or lower. Like this is the area I would love to observe, because the 500 was nearly like from 64, the 500 is within the range, so 30 to 50 pips. I'm just keeping an eye on the 10 to 20 or 5 to 20. I would love to see how the 500 level is doing over there, if it's going higher. See, so for that 20 pip range is still where market is staying or the bodies are closing. So I'm observing, okay, what I could have done or what I did wrong, something like that. I'm just observing, nothing else. It's still there. Let's see if it's willing to go higher using this fair value and for that 500 level or not. 500, 5.50. I'm gonna mark over there. Let's see, like these are some what it calls psychological levels. It's not for a specific reason or anything. It's just psychological level. 500, this is a big figure. Okay, 500.00, that's one. Another one is 505.50, something like that. Okay, so can you explain how did you mark the white lines? I missed out. How did I mark the white lines? It's just the projected terminus. When market is at the projected terminus or around the projected terminus, usually it can go at least like 5 to 20 handle. It's that part. So this is the 20 handle that I marked. And if there is a big figure, for example this 21,500 and like 21,500, this is a big figure or round figure. This is where market can go 30 to 50 handle as well from the projected terminus. So let's see. Love to keep an eye on this. Marking it because it can be the possible one. Can be the possible one. Just don't want to see it's closing above that mid. Do not want to see it's closing above the mid. Did it close above? No, not yet. Don't use it. Could have been a possible one. Just looking better if it can take this high on more time and then give us the structure shift if it's going higher like this way. Let me remove these white lines because we can like we know already where it traded. It went more than the 20 handle. Let's see how the 15 seconds is looking over there. It's a foolish idea, but anyway, why not? So let me remove it and keep an eye on this, because if it goes through that, I'm willing to take this one. Let's see, like it's a very small risk. Based on the 15 seconds chart, I could put it at the high, but not interested because market, what it calls, like at this level, no, like if it can go here, it can go there as well. It's like that. So not interested to put it any higher. Not interested to put it any higher. And the only reason I'm aiming for lower areas to target is because that is where it should go at least. This is a, I'm still going for that area, but let's see, like I don't think market is willing to take that liquidity today because of that 500 level. Fifteen seconds. Is telling me some stories. Is telling me some stories. Not interested. Okay, like I know this is a good target because of that fair value and this fair value, but yeah, not interested. Because whatever it is, every opportunity I'm seeing, I'm looking for that level. But yeah, this is practice account, guys. Please keep that in mind. Okay. fair value gap, it literally disrespected the fair value. However, it respected the order block. So you can mark this ways from the 15 seconds chart. Okay, I'm seeing it from 15 second chart, not from 1 minute or anything. I believe it is respecting the 1 minute's mean threshold as well, but let's see. Can be your breaker here, the extreme one, cause this between this, okay, like liquidity graph, market structure shift, fair value gap, that way. So first level of defense broken, second level of defense broken, the third level of defense so far sent the price lower and created a new structure or new fair value gap. So this is that fair value gap. I would love to see if market is going for at least these lows and that fair value or not. For example, now the stop loss should be here, should not be any higher. But I'm not targeting this because what's the time actually? It's 10:45. Macro incoming. And how is that 1 minute structure looking like? Okay. Macro incoming for the liquidities. For the liquidities. I'd love to see how the 15 seconds chart is looking like over there. Let me remove all these overlapping things and let's see how it's looking. Macro incoming for the liquidity. Come on, either the buy or the sell, something you have to clear right now using this macro. Come on, don't fool us. Now created equal highs. What do you think? If it fails to create fair value gaps, what's gonna happen? Yeah, it has equal lows as well, but if it fails to create the bearish fair value, what do you think what's gonna happen? I'll keep it because if it's fake, it should not go for that level. It should continue lower. This is the target for me, but I'm just utilizing like or I'm just looking for a bigger retracement using that area because it has now traded above the projected terminus and everything. So it's that part. After that big of expansion, I would love to see market is going through everything over there. 1 to 2 is hit perfectly. This is the opportunity. Okay, like I'm thinking about this as my opportunity. If it can go through that fair value, only and only if, because it's macro. So now is the time for the buy side to be cleared or something. If it fails to go through this last fair value. And by the way, I would love to see it's keeping this as unfilled, although on a bullish market, that's a foolish thing to expect, but still in a bullish market, I'm expecting the foolish thing, okay? And this is the regular fair value, market can fill it up completely. So Just because that volume imbalance, I'm still leaving it there, but this is how I would love to see if it's willing to go lower or not. It's the final countdown. Dee. Leave it, leave it, leave it. Yep. Yep. Just leave it like that. Because this is also a clean liquidity now. So continue. 1 to 2 was hit, okay? Like based on the entry and based on where it was perfectly hit. Remember that white line was my 1 to 2. Or like it was more than 1 to 2, but I was talking about that area for my first target. Let me see how far. So yeah, like nearly $280. The stop loss was literally here, like this. So 140, 280. Okay, this is 1 to 2 already, more than 1 to 2. But I am keeping it here because every opportunity for that sell side is something that I'm willing to take on a practice account, even though if it's a practice account. Even though if it is a practice account. Again, equal lows. I would love to see it's breaking through this bloody fair value. By the way, there is a 1 minute bigger fair value. The midpoint is what it is currently respecting or like reacting from. But I would love to see where the market is willing to go. That low is taken. Come on. Show us you want to go for the sell side now. 50, 50, 50. This is the 50. 50 has taken some sell side. Definitely don't want to see it's going above this fair value. Finally, the 15 seconds is what I'm using. How funny, huh? How funny. Boom boom. Boom boom bro, boom boom. But the problem with the boom boom is I would love to see it's breaking this bloody last fair value gap. This one. Okay. 15 seconds start, I'm keeping this one, but you know, like these reactions happening from the 1 minute midpoint. A strength is definitely not there. Come on, break that 5 minutes on. Let me actually mark this one so that I can have better point of view. Better point of view. 2 minutes something seconds left. Now is the time to say goodbye to that entry. Now is the time to say goodbye to that entry. Because it has cleared 1, 2, 3 times all the liquidities. And that's the third candle. Putting it as a red. I'm putting it as a red. Accumulation, manipulation, now the distribution. Something like that. But the manipulation can go lower for that sell side. Come on. Break that last fair value gap for us, for all of us. Because if it clears that sell side, I would love to take any buying opportunity it presents. Any buying opportunity it presents, I would love to take that. 51 seconds left. Get inside, close below that midpoint. This candle. Yep, continue. Stay below. This candle's closing will tell us the story, what gonna happen. If it's going for this liquidity or if it's going lower using that 5 minutes fair value. This is okay, already it has closed above or failed to close below the midpoint, so chances are high it's going for a higher run again. That is a possibility. Because this whole time it didn't even close below the 1 minute midpoint. Okay, like the 1 minute fair value is also the similar size from here to here. So this, until that's broken, cannot call it a opportunity for the lower run. Either way, like it has delivered. That's why I always look for the 1 to 2. So let's pray and hope market is at least clearing these liquidities so that we can aim for that higher run. Let's pray and hope. Trader boy, thank you so much. Thanks, bro. Can you explain how did you? Okay, I have got it. Boom, 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 bro. No, it was Boom Boom Afridi first. Then later, I guess the what it calls the killer was Rohit Sharma. Rohit Sharma was someone who was actually doing the job, the boom boom job. Hits after hits after hits after hits. Okay, definitely it doesn't have the power that it needs to go lower. So time for market to expand higher again. Because it's literally rejecting from that same area. So should we look for any buy setups? I'm not willing to, but yeah, like that's what gonna happen right now. Because it has now that clear liquidities over here. Okay. Nothing can stop it from all the way up. Let me go back to the 1 minute. Enough of the 15 seconds chart. I would love to see how the market is doing over there. That was the only bearish fair value of the leg. Will it give us any entry? I don't think it will. I don't think it will. It was rejecting from the 5 minutes midpoint. It was rejecting from the 1 minute midpoint. So already that was the indication to close the trade. But anyway, it's, as I said, like every opportunity it's representing, that is the opportunity you are willing to take. Should I? $175, so it should be 350. 1:2. I will be ending the stream at 11:10. Okay, like after 11:10. There is no point of actually sitting here because every buy setup will pay off, but at the same time it has the risk of a bigger pullback anytime. So that's a problematic price action, and we don't have any I would love to see it's going for that 500 level, to be honest, even though that was the 1 to 2, but I'm willing to see it's going for that 500 this time. Just let me check one thing. If I missed something by staying on that 15-second chart for too long. Yep. So after that liquidity was taken, this was that change in state from 1 minute. So yeah, doesn't matter. Got the sell side delivery, now getting the buy side delivery. Simple. I was literally looking for that 1 to 2, but aim is always this one. Every sell short setup, if you have opportunity to take partial, take it, put the stop loss to break even or in profit, and then aim for that. It's that. This is the 500 level. Let's see. 1 to 2 is already delivered, if I'm not wrong. If I'm not wrong, perfectly delivered, not just delivered. So 1 to 2 is the king. Okay, this is how the 1 to 2 was delivered, but again I'm willing to see if market is willing to go for that 500 level. Why did you enter there? Okay, see this leg, it was trading into a 5 minutes fair value. Let me draw the 5 minutes fair value. How the 5 minutes fair value was getting treated over here. Market is still left a little bit of it unfilled. At the same time, it was failing to close below the midpoint. That's the higher time frame point of interest that I'm talking about over here. From there, when market was like trading back into this fair value, this is the fair value it utilized to come back and take the liquidity. It was retracing from this low. Okay, like these equal lows. It has done it twice. It has taken one liquidity here, another one here as well. Okay, so that was the main target, but that is what. Now this is the inversion fair value. Why this is the inversion? From anything like from this high until this low, that's the only fair value gap you have. So it's more obvious that this is the inversion. There is no other fair value that can be inverted over here. Okay, so it was that. You see the red color? When I put the IFBG, this is how it looks. Okay, so by the color you will know what I'm referring over there. So it has traded the inversion, delivered the 1 to 2. Yeah, I'm not taking it there because it's a practice account, but this is exactly what you have to do for the rest of the time until you have a deeper retracement with a point of interest or a bigger push with a clear 15 minutes fair value gap or structures forming. Without those structures, you cannot aim higher because you don't know how far it should go. I don't know, no one knows. ICT, any ICT trader, no one can tell you how far it should go. So whatever the profit it's offering, you have to capture that profit. It's like see profit, take profit. This is the moment where you have to see profit, take profit. You have to go that way. So yeah, I mean, it is what it is. I hope you got the idea. This was the only bearish fair value that previously market respected and continued lower. For the low, it was retracing from that liquidity to clear that liquidity. It cleared it, failed to create any new fair value. That is already an indication. I was in 15 seconds chart, otherwise maybe I would utilize this area as my entry point because it was failing like so many times to go through that area, the midpoint of the 5 minutes fair value or even the 1 minute fair value. Okay, like this is the 1 minute fair value. This is how the midpoint looks. So it was more obvious that this is a change in state when I was too focused on 15 seconds. See that 1, 2, 2 fair value gaps. What you could utilize over here, the 1 minute order block. I don't know where the order block level is. Let's say this is your entry point. Where should be the stop loss? If you're entering from there, your stop loss should be below at least the what it calls the breakaway gap of the last fair value gap candle slow. This is how you are putting your stop loss. And here what happened actually, liquidity grab. I am not I'm not willing to call this as a market structure shift. However, this is your market structure shift when from 15 seconds structure. Okay, like this is your market structure shift and it has delivered that 1 to 2. I'm just not taking it because it's a practice account. I don't care about the practice account. I believe it should go for that big figure or 500 level. After that, let's see if it's willing to continue or if it's willing to give a bigger, deeper retracement. So yeah, I mean, after this market structure shift, what is the structure now? Fair value gap, breakaway gap, stop loss at the breakaway gap candle slow, entry from fair value. I got it lower because I identified it from the 1 minute, and same thing on 1 to 2 target or whatever it is. So I would like to target this. Even higher above that 500 level. Let's see. This is the 1 to 2 based on the 1 minute structure because I utilize the inversion fair value as my entry point. But from 15 seconds structure, this should be the target. So I'm putting it there. 1 to 2 was delivered. I am willing to see if this is doing or delivering or not. And also remember the macro. Okay, I was talking about it. Why? Because macro will do something like this. This is the 50 candle. Okay, liquidity, it will take some recent sell side, then it will give you the buy side. This is that buy side. When the buy side opportunity was presented, this was the entry, this was the buy side target. But you know I target 1 to 2, so this is the 1 to 2, and based on the 15 seconds I'm putting it there. Let's see like if market is willing to go there or not. It's a practice account. I'm practicing. It's a learning. This whole week will be a learning session for you guys. It's not for making money or anything. If you're trying to make money using this week, chances are high you will be messed up. Like that's the easiest thing I can tell you guys. Because okay, it's still within that macro, creating relative equal highs. I'm just willing to see if it's aiming for that 500 level or not, psychological level. Okay, I would love to see it's aiming for this level before it can give us a deeper retracement. The one thing I'm not liking is there is no fair value on this leg. That's a problematic thing. This is a very problematic thing, because it can simply take this liquidity, go very close to that 500 and then come back for a deeper retracement, because it is not, again, it is losing that strength. The same thing you're seeing over here. Fair value created, traded, took the liquidity but failed to create any new thing. What happened? It went through that. It's the same thing. fair value gap created, it didn't trade that fair value, so I'm willing to see if it's coming for that level or not, since it has created that relative equal high. Other than that, this is not a good signature from the market that it's willing to go higher. You need fair value gaps to tell you the story. Maybe I'm not gonna hold it until that for not anymore, because this fair value and that inversion has a smaller portion overlapping that can be the balance price range. So I'm willing to move it inside the fair value. I would love to see it's leaving it as a breakaway gap before it can go for those relative equal highs. Let me remove it and let me keep it this way. And even I will move it a bit further. Even from the entry point, that's how the 1 to 2 looks, tick by tick. 1 to 2 is the king, man. 1 to 2 is the king. As I said, it's because practice account. I'm more than happy to go with my 1 to 2 for rest of the session, as long as market, like rest of the session means rest of the month or days or year, whatever it is, market is creating new all-time highs. Every entry I will take, I will do it this way. Yes, what I can do is, if I can take partial, I will take partial and hold for higher runs or moves. But because that can be the opportunity, okay, this is something that I'm talking about, like that can be the opportunity that market is going. For example, like if you have framed any setup, let's say earlier today or after the 9:30 opening, if you got any setup, this was the what it calls, this was the last fair value that market was holding, first fair value, second fair value, it didn't give any entry over here, so nothing to frame over there. But let's say you got any entry around this area, even this retracement, like you got any entry, take partial, move it to the break even, then hold for the rest. For example, 500 is a big figure or a round figure in terms of the psychological level. You take the partial at the recent level or 1 to 2, whatever it is, move the stop loss to break even, and then you can leave the runner, so that you can get that bigger opportunity. Because all time high, you don't know from where exactly it should fall or how far it can go. So if it is going too far the whole day, how far it has expanded, like literally this is where it started. Let me go to a higher time frame, otherwise it's a big range, it will not fit in the chart. This is where the low of the day is, and this is where the high of the day is. It's 191 handle. This was my projected terminus, maybe the same way, like 5 to 10 like 5 to 20 handle is what I could have targeted using the projected terminus if market was continuing like this, and if I was in a trade from this area or any of this area. So after taking partial, I would put the stop loss at break even and hold until maybe this, and 5 pips, 10 pips above that projected. That's my maximum range. That is where market is trading and going higher or continuing higher. This is something that you guys will know or learn throughout the time, like how to maximize the day market is trending in a certain direction. Issue is, at all time high, we don't know from where exactly it should fall. Okay, this is that breakaway, like the way reason I put it here, okay, because it has a balanced price range from here to here, this. So I don't really want to see market is coming and closing that fair value completely if it's willing to go higher. And definitely I would love to see new fair value gaps forming inside of this leg when it is going for that liquidity. The reason I'm not marking like this way is because I'm this is consecutive, so I'm just looking into those areas. So from here and here, body to body. It has traded both of them in threshold. Like if you mark like this way, it has traded that. If you mark like this way, it has traded that. So, and there is that volume imbalance. So let's see. I'd love to see this candle is going back above that level. If it's failing to go back above that level, then the very next candle has to do the job, which I'm already seeing because of. I'll draw the slides. I'll put it this way. And this. Nope, not sell side, of course. Don't. Okay, done. Done with the trade, done with the thing. Even if it was here, I believe now is the time market can even like come back and take this. Oh, by the way, how is the ES doing? Even though there is a higher high on ES, it's not willing to like look at the structure. Like this fair value is here. ES didn't even come for this fair value, which is a signature that I'm not willing to go for a sell short. If it continues lower, I would love to wait for a like proper 5 minutes change in state or 15 minutes fair value, something like that to form. Because now I have a bigger range. Okay, what I said is every time there is a sell short opportunity, your target should be until this level, because this. It's not. Let me actually mark this on as well. Let's see like how that one is paying off. On to deliver, that's it. Like this trade, that trade, every trade has delivered your profit, as long as you're happy with it. I'm just doing it because it's practice account. I don't care about the practice money. I'm happy not to touch the funded accounts today. How is the 5 minutes looking? Look at this. Isn't this scary? How? So don't frame the sell. Let every sell go, because it's not showing the intention to go lower. This can be the 5 minutes order block retest, and again market can go higher. Let me remove. It has already delivered, so it's done. I'm not thinking about the inverse fair value anymore. I'm more about seeing how this fair value is getting disrespected and how the third candle. Why third candle? There is no other fair value here. Okay, so this is that. I would love to see how market is trading that part, because it has traded back into this candle. This is the candle that is trading inside of a 5 minutes fair value gap. So this is the lowest down close candle. It can act as the 5 minutes order block over here. So this is it. Okay, so yeah, it is what it is. Let's see how the market is willing to. Because it's not showing the indication, guys. Literally, this is where the, for example, to mark a SMT divergence, I need to have, like, literally what it's doing is it's creating lower highs over here, it's creating higher highs over here, but it's not telling me that it's willing to go lower for a deeper run yet, not yet. When can it confirm me that is when I will see a 15 minutes fair value is forming. Look at the 5 minutes structure so far. Okay, nothing over here, long wicks on top, no fair value gap, nothing is forming over here. Same way from the 15 minutes chart, so far I didn't even get the change in state of delivery, not here, not here, nowhere, like literally nothing. I would love to have a fair value gap. This entire leg didn't create a single bullish fair value. So the way it was going, it's not tradable. It's whatever I tried or I showed over here, like that 1 to 2 from the 15 seconds entry, or this 1 to 2 from the inversion, it's all just gamble. I'm not saying any of those entries are valid, because there is not, like, the whole leg, anything that you can utilize. The only hourly fair value it had was this one, and it didn't trade that fair value. There is no other fair value over here, nothing. This is the hourly candle that closed at 11. It's now 11:20. So by next 40 minutes, if it touches even this level, there will be no hourly fair value. So what is happening over there? Whatever it is, do not look for a buy yet, do not look for a sell yet. The sell will be valid when you will have a 15 minutes bearish fair value that you can use as your higher time frame point of interest. You don't have any higher time frame point of interest. Only the 5 minute has some structures that market is respecting. I'm not seeing any other thing over here. Like literally the 5 minute has some structure like this. This fair value previously respected, it's respecting that exact same fair value. There was a fair value here that was getting respected. There was this fair value that was getting respected. There was this fair value that was getting respected. So if you are using 5 minutes, good on you. If not, then it's also good on you, because you should not be looking for any setup on a NFP week. Where was that? Here. I'll mark both as the 930. No fair value gap. Order block. Remember the mean threshold? Look at the mean threshold. Even from the 1 minute. So whatever it is, do not frame any setup. Anyway, I'll finish actually, because today it is not the day, bro. When the market trading at all time, should you look for buy only in London session, irrespective of which side it broke? In London session, yes, but for that, please wait for some retracement to your higher time frame point of interest. Or if you can find a bearish PDRA, let's say it has cleared the Asia high. If you can find a bearish PDRA, use that PDRA for a smallest possible target. Okay, do not go for Asia sell side or previous day sell side, things like that. Because I saw a lot of you are literally targeting with a one single entry all the way to the liquidity level. That's the shittest possible idea you guys have. If you're looking for 10 or 20 or every trade, your win rate has to be 10 or like 10%, 20% maximum. You cannot expect a 60-70% win rate with a 10 or 5 or 6 or like risk to reward ratio every time you are trying to frame it. It's not possible. So be careful about what you are doing over there. First take the partial. Yes, you can hold for bigger ranges if you get your first partial and put the stop loss to break even. If you have bigger ranges, you can hold for it after closing partial, but you have to close the every time. Okay, like see that entry, this is the low that was created before the retracement, so you have to target this low if you're taking this entry. Take partial. If it creates new fair value gaps, your stop loss should be at this high or whatever the break even, you're putting it at break even, then you're looking for the next move. It's the same thing for any like buy long setup. Take partial at this high or even like whatever the other high you can mark. For me, I always look for 1 to 2 as my first target, right? Regardless of the liquidity or whatever. It's that part. Then you can hold for the bigger moves or anything. Finally, but doesn't matter. It doesn't matter. Not broken yet. Okay, the 5 minutes last fair value, this one. I'm also looking at the 1 minute last fair value, but yeah, like the 5 minutes last fair value is not broken yet. I'm willing to take a crazy step over here. This is a crazy step, do not take it. What was that yellow line? Oh, this is the target, to be honest, but I'm just trying to see if market is willing to come at least these fair value gaps or not. The stop loss will be there, not higher than that. It should break this one now and go for at least this level. I'm looking for a fair value gap in 1 minute when it's going through this one. A fair value gap in 1 minute when it's going through that level. If that can be presented, I can think or I can expect market to go for this level. I don't even want to put it there. 18 seconds, come on, a big displacement right now at the last moment. Or maybe one more time revisit the same area. Okay, this this range, okay, the reason I'm in a trade or I'm trying to take a trade is because these two down close candles are your propulsion blocks. Market has cleared liquidity there, but most importantly, this is the type 2 MSS fair value traded order block. Market traded or failed to trade the order block, fair value traded. This is the next range. I'm a bit confused because it didn't trade that order block. Could have been great if it could trade that order block, then gave me this one. So maybe I'm too early in the trade, but let's see. If that is the thing, I'm expecting when it will go for the sell side, a fair value will be formed, and that fair value will be an unfilled fair value, like a breakaway gap, something like that. So let's see. It has these consecutive ones, and I definitely don't want to see it. Can go for that no wick candle, but definitely don't want to see that it's closing the body above this. Although the highest up close is the one, but I'm still happy to see that it's rejecting from below that level. I'm expecting a big displacement with fair value that should remain unfilled. Now, if it fails to create the fair value, I have to exit out of the trade. It's that simple. This is the sell side, the equal low. It has cleared the sell side. That's where the entry should be done. Okay, like just this profit, maybe a tick below that sell side, that like that. But I'm not willing to take it this way. Okay, that's why I'm putting the stop loss here, and the reason I'm putting it there because there is no wick. If there is a wick, I would cover the mean threshold and maybe a little bit above the mean threshold. Because no wick, that's why I'm giving it that range. So it's failing to create the fair value gap so far. This candle's closing, if it doesn't expand violently below that range, below that fair value gap low, I will close out or exit out of the trade because I still have the opportunity to see the fair value gap forming. It's because of that. Okay, this is that part. So this candle's closing, I'm done with the entry. That's it. I'm ready. I'm ready. I'm ready. I'm ready. Boom. Okay, I don't care if it expands now or whatever, but done. I didn't find my fair value gap when it was clearing that liquidity. So done. And the thing is, like, this was the highest or only from the swing low to that swing high. Okay, so this was the only bullish fair value that market broke, then retested. That's why I marked it as the inversion, in case you are wondering. Either way, if you even mark this fair value, it will be the same thing as well. See that? Because that's the low to high only fair value gap. Broke, mid reject, like this is the break, mid rejection, continuing lower. It's that part, but I'm not willing to hold because I am not finding the fair value I'm willing to see. I would only hold if this candle was closing below that low, that candle's low, or like with something like this, whatever this candle did, something like that happened here, like this candle expanded and closed around that area. Only that was a opportunity for me. Other than that, no, I'm not. So guys, I'll finish the stream because there is no reason, to be honest, to sit and look into this type of price action. I'm gonna finish the stream, and I hope you guys will not blow your account trying to make money on a NFP week. please do not push too hard or rush into a trade because it is going to a certain direction or something. Because look, like after all this structure, 5 minute didn't create a single fair value gap, like except for this one inversion. Okay, 15 minutes in the form of creating. So when it will create that can be the area where you can look for a entry. Other than that, as long as there is no fair value gap, it's not indicating or it's not giving you the indication that it's willing to go lower. It's that simple. See, it didn't even trade back into the fair value. It already started to go higher. Let's see if there was anything from 5 minutes. I'm not seeing anything here. This candle's range, I'm not even considering that. I would love to see it's going for at least this fair value gap. So if that is not the scenario, it's not a high probability scenario over here, because you needed bearish fair value to form on that leg. I think this is where I put the stop loss. Three times, okay, it has delivered the way it was delivering, but yeah, none of them are valid. None of them are valid. It can go literally higher because there is nothing to stop, at least until that far. So be fearful, be careful. That's the thing. And the 15 minutes is still, it's failing to create the fair value. Like if it goes, it still has 9 minutes left. Okay, if it creates a long wick and covers that area, there will be no bearish fair value gap. So yeah, I mean, be fearful and don't rush into a trade. Don't blow your account. Practice, observe, learn, whatever it is. Do it this week, and next week you can have fun with the market. Next week only one day you have to be considerate. That is the federal fund rate. I think that is also a Friday or something. Other than that, Wednesday CPI, yeah, 8:30, so we don't have to worry about the CPI news at 9:30 opening. And Thursday, where is the federal fund rate? 18th or something? Yeah, 18th here. So 18th of December is when you have to be a little careful. Other than that, it's okay. Like overall, the news are around the time, like, oh sorry, next week. The news are around like 8:30, then 10:30 this one, we don't care, because even if we have to care about this one, we will have opportunity. What do I mean by that is, from 9:30 until 10:30 we'll have at least an hour to frame our setups or to get something out of the market during that period of time, because CPI is happening at 8:30, so already it's before the session. And then the crude oil, as I said, I don't care about crude oil even today. Like, have you noticed anything at 11:30 10:30? Let's see, like at 10:30 crude oil. This is your crude oil candle, this one, okay, the news candle. So I don't, as I said, like crude oil is mostly for the crude oil, the CL. I don't know how big it was at 10:30 on crude oil, but here, okay, medium impact. Still look at the size of the candle, compare it with any other candle, like anything else that you can see over here, compare that. So crude oil is for crude oil, it's in the name, it says crude oil, right? So it's for the crude oil. But anything else that is CPI, PPI, unemployment claim, unemployment rate, pending home sales, home sale, I believe it's not a big deal, but still, like whatever it is, if it's related to US dollar, and this market, then only you are considering that. Crude oil, I never saw a impact on the market. I never saw the impact. Finally some indication happening, but still you need to wait for that 5 minutes as well, and there is no weak candle. So this 15 minutes bearish fair value can be a indication that finally it's going for that sell side liquidity, but for that you have to wait until market can break this fair value gap. Even if you like, this is according to my friend and this is according to ICT. I'm keeping both of them because this one didn't provide that good delivery or price action, but this one at the beginning it did, but later on there was a fake movement happening around that area, or more of the like from this low until that high, the first fair value and the the entry fair value and the last fair value, the way he named it, I liked it. So it's that part, like it traded the last fair value, then it went higher like that way. So from this low until whatever high, you are looking at this fair value and this fair value. If market can break those fair value gaps, only then you can maybe look for this sell side. And also for that you need to have that bearish fair value from 15 minutes. If it's not presented, you are sitting on your hand. You are sitting on your hand for the rest of the week. Simple. Just keep it that way. Sit on your hand. Don't aim for trades, because it will be problematic. Believe me, it will be problematic. The way it's going, are you thinking like, look, after that fair value trade, there was a unfilled fair value gap sitting right there. Other than that, all this, no intention, no what it calls, no indication that where should you take the entry and where should you put your stop loss. What should be the reason that market should not go higher and stop you out at that level? I'm not seeing any reason. So that's the reason I even like on this candle's closer, I closed it. What I said is, if I saw this candle was closing like this way, the way this candle closed, if that was the scenario, I might still hold. But remember what I, again I'm just showing you, okay, like literally this leg has already provided the 1 to 2. It was, I think, here, yeah, something like this, 1 to 2. 3 entries I have framed, one from here on the 15 seconds, 1 to 2 delivered, the inversion fair value from here, okay, like this one, entry, stop loss, 1 to 2 delivered, okay, like the first leg, not that leg, this leg, okay, like this, 1 to 2 delivered, okay. The same here, 3 entries, 3 1 to 2. Now think this is already 6% on a NFP day. I'm not willing to use it, but I'm just saying because that's what I'm trying to give you guys. It's a risk to reward that most of the people targets. So there will be a lot of take profit happening at 1 to 2. So yeah, I'll finish today. Hey Outlander bro, how are you? Good to see you. Good to see you. I saw there is a TV series named Outlander. I'm willing to watch that TV series. I don't know how good it is or how bad it is, but yeah, I'm willing to use it, watch it. Let's see. I was about to finish. Like I was willing to finish at 11:10, but somehow I'm still here. Somehow I'm still here. Anyway, thanks a lot to everyone. Good night, and it's almost 12. Yeah, it's Eastern 12 and it's almost 4 a.m. my time. So it's actually my time to go to bed. 4 5 a.m. is my usual bedtime. And then get up at 8. Go out for the job, whatever it is. This is the 15 minutes FVG that's in the form of making one more minute. So I believe there will be the fair value unless something like this appears from here and boom, cover up that area. But yeah, I mean, finally we might have the delivery for this sell side liquidity until that hourly fair value gap, or even those 15 minutes a small fair value breakaway, however you want to mark it that way. So can be, but keep an eye on these two, because this is also a area of possible reversal, this and this, because of the way it did from here and the way it is coming lower. Not a single bearish fair value is getting formed, so be careful, be careful. And I might skip tomorrow's live stream as well, because until Friday PM session there should not be any good any valid reason to enter, and using practice account the whole time, it's feels like a waste of time. I might use that time to maybe enjoy, like watch a movie or TV series, something like that, or even sleep. Okay, take a better sleep, something like that. So Alex, he's a market maker worker. What happened? Alex, no kidding. That's not. Alex, what do you work with? Oh, I'm a software developer, so I'm working in a software firm. That's the only thing. I'm a software engineer. That is the degree I have got from this country. Although I was planning to study further, but yeah, I mean it's again a waste of time to me, so I didn't bother. I didn't bother much. Uh, Feels bad, but what can I do, bro? Feels bad, but what can I do? If it can create the other fair value gap here, so this I can mark it as a like, I'm marking it as a bag because yeah, I might use my friend's way, like he marks it last fair value, entry fair value, something like this. I might use the same way because this is something that we are expecting, as long as there is a fair value presented here. If there is no fair value, a small big doesn't matter, like this way. If there is no fair value, there is this is not a bag anymore. It can remain as a bag, I can still expect that way, but yeah, like if there is a fair value gap, I have reason for market not to go there. That's why I mark it as a bag, or the first one we expect as a bag, then the second one as the regular fair value. It's literally that reason, like this. Let me remove it and keep the way it was. If it can create, later we can check. You guys know what I'm referring, so I hope you will be okay. But so far I'm still not convinced that market should go higher from here. Yes, I can see that those down close candles are getting respected, or support resistance, the typical support resistance is holding the price. The only issue is there is nothing except that 15 minutes fair value that should hold the price. Let's see the 5 minutes. Not a single bearish fair value gap. So yeah, I mean it's not a good indication that market is continuing lower for the ultimate sell side and that fair value. Yeah, it's a waste of time. I'm going guys. Back end, front end, back end, back end, bro, back end. Coding, not designing the user interface, coding the interface, sorry, coding the whole project. It's now more of a part-time job. It's like a complementary job. For example, like I have explained it so many times, Alex, but I believe you were not here or something. It gives me the freedom of not trading when I'm not willing to trade. It's like that. Because if trading was the only source of income, I had to force the market to give me some trades or make some profits, which I'm not willing to do. It's literally that. So the day I don't feel like trading, I don't trade. For example, this like today, yesterday I couldn't sleep properly, so I had no option but to let today go. Because when I came back home, I cannot sit on the chart on London session or even the later part of the day, like 6 to 7:30, that window, something like that. Because if I sit like that way, then after that, if I plan to stream, I have to stream right after that, right? So yeah, I mean, I had a very less time window between the stream and between the sleep that I am missing for the entire day. So I just let it go, and it was expanding the whole day. Like Asia session, London session, every session was literally expanding, which is not an ideal day. When that happens, I mostly expect the New York AM session to be choppy. It was overall the upward move, but the way it moved higher, I don't think there is any high probability setup formed inside of that. Nothing. Like this is the 930 whole price action. Yes, the settlement was lower. I removed the line, I believe, but whatever it is, the 930 opening was something like here, and it came around 25% of that opening range gap. I don't remember where exactly the gap was. I can mark it, but let's see. 415. This was the settlement. So from the 930 to the settlement, before I go, the last grid, this is the 25%. It traded 25%, went higher. This settlement was okay. Shouldn't have removed it earlier. Oh, okay. Now it makes sense, because the fair value and the settlement, like 930 opening range, opening range gap or gap range, whatever it is, that high was there. So it was literally, this was a high probability area or something, high support zone, something like that. In terms of understanding the fact, I'm just seeing it now because I removed it too early. Anyway, doesn't matter. Whatever it is, you should not be trading until Friday PM session, or even better if you come back next week. Observed price marks, like the way I'm doing practice account, I'm framing some setups, the 15-second setups, the 1 minute setup, the inversion fair value, whatever it was. Okay, like everything from this liquidity market structure, from wherever the entry was, I believe that it was something like this way, and the stop loss was right here, came very close to the stop loss, but eventually this was the target where I was getting the 1 to 2. I think it was even little inside, because I know for a fact that it gave me 1 to 2 at this level, or even this, whatever, doesn't matter. So something like this. Okay, the third candle's high was where I put the stop loss. So I remember that level very beautifully, or I remember it. However, yeah, like it delivered 1 to 2 on the sell side on that 15 seconds entry. The 1 minute inversion fair value gap entry delivered, like 1 to 2 is the key. Simple. Okay, every setup or every trade I was framing so far, every, like all of those 3 trades delivered 1 to 2. The inversion Just before I go on more time, since I can see few new people, like literally the exact 1 to 2 and then all this, the propulsion, I took the entry from the consecutive ones low. Stop loss was at the 5 minutes inversion fair value gaps low, but let's say it's at the high. Okay, 1 to 2 delivered, then whatever you're seeing, all of them delivered. 3 setups, 3 of them delivered. Now it's done. And during this entire all-time high moves, at least take partial at 1 to 2 and move your stop loss to break even. You will not regret it, that's for sure. But if you don't take it, you will regret it. You will get the result out of your trade. With this CISD, could you consider a buy? With this CISD, could I consider a buy? It's I'm not considering anything, but yeah, like what you are talking about, I got your point. But the problem is, if you consider a buy, the buy has to be, this has to be your target. I'm not even talking about high, the low of the fair value gap. If that is good enough for you, then you can go for that. But this CISD not a high probability change in state for me, because it is not trading any 15 minutes fair value gap. It has traded that consecutive down closes. I'm not willing to say anything about those. Yes, you can mark like this, okay, liquidity grab, market structure shift, maybe your breaker, it's bullshit. This is like forcing the market to show me the entry. So yeah, until that level is where you can maybe maximum go with this change in state from the 5 minute chart. But it's not a high probability by any mean, because it has given the change in state, retested or revisited that stop loss. First you look for the mean threshold. If there is a fair value gap, cover the like 75% or something, or even if you can cover the low of the what it calls, low of the order block or change in state candle. It is not going to be a 1 to 2, so for me it's not a entry. Okay, it can go through that, it can again go for that high or whatever, but the reason is yes, nothing else. Okay, yes is still making higher highs when NQ is falling, so I'm not willing to look for a sell short. And it failed, like literally look at that price action, it failed to create any new fair value gaps when it was going lower. But when it's going higher, it has already created a fair value here that's as a breakaway gap over there, and it is now creating more fair value gaps over here. So I mean, one single 15 minutes bearish fair value, but is there any other fair value from any time frame? 5 minutes, not a single fair value. 1 minute, no fair value gap until, like, let me move it there, no fair value gap, nothing over here. So I'm not considering anything towards the sell side. Whatever I had to consider, I considered. Wherever I had to close, I closed. That equal low, like in a practice account. Okay, still in a practice account, think that way. So yeah, I mean, no fair value presented in any other time frame, so chances are high this 15-minute bearish fair value might turn into your inversion fair value, using what market can go higher, as long as it's broken from the 15 minutes chart. The only thing I'm not liking is from where it is reversing. That's it. If it even reversed from this area, I would love to consider that, but it's not. It's reversing from a literally a random area. Fair value gap, fair value. Yes, I know there is a huge CB and BC overlapping that area, so market doesn't necessarily need to trade there, because it's a balanced price range within that fair value. So wait for the structures, you will get your setup. Change in state I usually mark from a higher time frame point of interest. I don't know if there is any hourly thing. And that's not trading into any fair value gap, so I cannot consider this as a propulsion block or order block, anything like that. If it's a propulsion block, you will get the hourly fair value gap forming right after this candle's closure. It will continue higher and create that propulsion block, create that fair value gap. So wait for that to happen. For this, from this low, I'm counting this low because this is a liquidity as well. Below that we have the fair value gaps. This was the first fair value. There is no other fair value forming yet, so it's not a healthy move for me. 4 hours, it came very close to that fair value gap. It didn't trade that fair value. So whatever is happening, I'm willing to see market is coming for a fair value gap retest. If that happens, I'm more than happy to continue higher again, like look for buy setups or whatever it is, like look for the setups again. All-time high, only frame the buy long setups according to ICT, not according to me or anyone else. It's according to ICT. When market is at all-time high, keep taking buy longs until proven wrong, until you can figure out that from the higher time frame like daily or 4 hours or even weekly, market has shifted from bullish to bearish, and you know how to mark the shift. So wait for that to happen. Okay, so anyway, I'll finish it here. It's like the more I'm staying, the more it is getting weirder and weirder. So yeah, I'm gonna finish. This could have been the change in state as long as this is your target. It's going there. I'm not thinking like it's a win-win situation, because there is the first time ever market created a 15 minutes bearish fair value. So you cannot just disregard that fair value straight away. For that reason, I'm not calling this a win-win situation. If this was your target, then you are happy, like putting 10 handle worth of a stop loss and 10 handle worth of profit. That's it. Even though like this is a liquidity, even though I'm willing to see this psychological level, maybe 500 or 500, 5.50, this sort of level can be the area from where we can get a deeper retracement or something. But this is the first time market created a 15 minutes bearish fair value, so cannot disregard it just because it's going for that 1 to 2. It's a impossible task that we are asking over here, and maybe the stop loss could be a little higher, so that can be the 1 to 2. But anyway, doesn't matter, not a setup. Okay, so I'll it's not a CSD in 1 hour cause no 15 minutes FVGs. No 15 minutes FVGs. Where is your CISD? Any of this? I don't know, like where you are actually thinking about the CISD in 1 hour. Maybe this was your CISD, first CISD from hourly chart that market didn't trade at all. But yeah, like I'm not saying seeing any CISD forming over here, sorry, over here, because there is no 15 minutes fair value gap. This whole leg doesn't have a single bullish fair value. Also, this is not on because there is no bullish fair value. There is a small volume imbalance, but doesn't matter, like market has came below to those liquidity, so that is not a concern. This is the area where I have the CISD, because it was creating 15 minutes fair value, one here and a very small one here. The third one is what market is trading the whole like AM session or even during the Asia and London, I believe. Yeah, so this is like around 4. So this is the only fair value it traded. Other than that, literally there is no other fair value forming. If it was trading any hourly point of interest, I'm not marking or considering this as a order block or anything. But if it was trading, then this is already a possible change in state that you got, and market is retesting that, continuing higher. As long as it breaks this bearish fair value, you can maybe utilize this one as your inverted fair value for higher run, at least for that 500 level or 505.50, the institute, like what it calls the psychological level. If it goes through that level, what is the next one? 555.50. That way, like psychological. Now it's only the big figures that you can look into. Every 50 and every 100 level, look into those. Because other than that, you have nothing. Like you can project with some standard deviations and look where the close proximate alignment happens. But yeah, I mean, that can be a thing. If it overlaps with any big figure, that's a better or higher probability area. Other than that, it's just gamble. So consider the recent high as your liquidity, take partial or take the profit around that area, and again wait for a new structure to form before your next entry or setup. If it's continuously going higher, just let the market go for the day, because you have already secured some profit. Close it that way, come back the next day for new structures. Yeah, I will finish because it's like every time I'm saying it, I'm getting a new question. It's not trading any POI. Okay, got it, thanks. Yeah, no point of interest. Like this low, are you like, if you are marking this way, okay, like liquidity grab, market structure shift, this is your breaker block, order block, this way, it's not valid. The reason it's not valid is no market structure shift is valid until there is a fair value gap presented on that structure shift leg. There is no fair value gap over here, nothing. So this structure shift is not valid. That's the first thing. The other thing is where it is retracing from, like the whole leg, it doesn't have any fair value at all. Not from hourly, not 15 minutes, nothing. This is hourly chart. It didn't come for the hourly fair value, which I had right here, which is this one. Although I have marked it wrong actually. That one or is that I? Okay, and visibility should be the hourly. This, okay, so that hourly fair value gap, if this leg was from here, I would consider this as the order block, but I cannot. It's a random area from where market is going higher, so it's nothing for me. I don't see it as the order block. The buy is now a low probability because look at the hourly structure. Not a single bullish fair value formed in last maybe 5-6 hours, or even more than that. 1 2 3 4 5 6 7 hours. Not a single bullish fair value. Big candles, okay, but no bullish fair value. Same thing for the 15 minutes, same thing for the 4 hours as well. Like literally the 4 hours, it didn't trade the fair value, it is not creating any fair value. So now anytime market can give a sudden drop, you'll see it. At all time high, this sort of thing will happen. So if you don't go with the like see profit take profit strategy, you will be messed up very soon. If market continues at all time high, you will be very soon messed up if you don't do it that way. So when you see profit, you take the profit and then wait for the next entry or setup with minimum risk. Don't risk big during these stages. Don't be greedy because it's going one direction or something. Anyway, I'll finish, guys. I have to finish. I have to get back to bed so that I can have a healthy body and come back with a healthy mind as well. Anyway, tomorrow I might not stream because, to be honest, it's a waste of time for me and all of you as well. Because until Friday PM session, you should not be looking for any entry. Even PM session, what time is the press conference? Friday press conference. There's supposed to be a press conference. NFP. Open. No, actually, am I missing something over here? Press conference is in yellow folder or is in red folder? Inflation expectation, that is also something that can have a little volatility, but why there is no press conference this NFP? There's supposed to be FOMC and press conference. I cannot see that happening. Is it on the Federal Fund Rate 18th? Yeah. Okay, so maybe until you can trade after the news, after from the AM session. Avoid the 10 a.m. except for 10 a.m. I think you will be all right. So Friday, until Friday. And I will not come live tomorrow. Yeah, like I'll rather, I would rather enjoy the time with my friends. Couple of my friends are going away. Friday one is going back to his base, the Air Force one, and Saturday another one is going back to Bangladesh. So yeah, I would rather enjoy the time with my friends. Avoid. It's about avoiding. That patience has to be there. I'm not willing to use it, but let's see, like if this CISD has the power to create the next fair value gap or not. Just marking it this way. And you have to mark the mean threshold as well. Anyway, guys, until next time, take a very good care of yourself, your health, and yeah, the Maserati friend, yeah, the Maserati friend. He bought me a Air Force T-shirt. I don't know if I should be wearing it outside or not, but since it's a gift, I kept it well preserved, because it has all the Air Force stuff, logo and badges, some of the badges as well. It's like he got a few of them, so he bought on for me. I don't think it will fit my body because I'm a very skinny guy, but it is what it is. Gift is a gift. I don't uh, judge it by any mean or any valuation. There is no valuation of a gift. So yeah, uh, guys, bye, good night. Good night, good afternoon, good evening, good morning, wherever you are watching it from. So yeah, take a very good care, and please do not blow your account during this week. Next, always trade for tomorrow, and if you are even like losing the control and taking the trades, don't risk too much, and whenever you see the profit, you take the profit. This is the only way you can survive this specific week. Every month, first week, Wednesday and Friday, that's the hardest 2 days, and of course the day between, which is Thursday, you avoid it. Okay, so yeah, bye, good night. I'm saying it maybe 10 times. Say Manu, do you think left of December is there chance to trade? Left of December, I think you are talking about the rest of the December. Yeah, like on the third week there will be again some crazy things happening because of the federal fund rate is on 18th, and I think before the fund rate there is the CPI, PPI, something like that. So whatever it is, next week will be good, and I hope, I believe next week will be good. You have to avoid this one single day, which is the 18th, because of how the PM session has the most important news of all, which everyone is looking forward to, the federal fund rate, and after that there is the FOMC meeting as well. So like 2:30 PM session will not be something you are looking for a trade, and AM session can be very choppy because of the upcoming big event. This is one of the biggest economic event. Okay, the federal fund rate, it's the interest rate for loans for banks. So whatever the bank gives loan or they take from the Federal Reserve Bank, it's that rate that is coming out. If it's reducing, it's good for the overall economic condition. If it's increasing, it's bad. I don't trust in this thing. Okay, less interest means you are paying less for your loans. So I don't trust that actual greater than forecast is good. It's not good actually. It should not be good, because when you have more interest in your head, you have to earn more or you have to spend more. So you have very less to invest. Logical. I'm thinking logics. I don't care what it says. I care about what the value stands for. Anyway, so 18th is what you want to avoid. Before that can be tradable, after that will be good as well. And then again you are avoiding this because of the 31st night and stuff, like the new year happening. Bank holiday, avoid. The next day after bank holiday, avoid. And then this. Okay, so you have literally next week and until 17th. From 18th, I don't believe market will have a good price action. It can be a lot of buy sell, like seek and destroy type profile, because of the new year. People might have parties or whatever, like they might need to take out some money. This sort of thing can happen, like a lot of take profit, stop hunt, this sort of thing might happen. So I'm willing to avoid this specific area. Anyway, bye. So many times I have said it. Now finally, bye. Oh my god. Good night. Bye for the 12th, 13th and 14th time.